had I basically what I did was I had investments that I was running for family and friends when I was working in private equity, like Berkshire Hathaway and a few other companies. And I just rolled them into the fund to start the fund. It was pretty immediate for me that, especially once I started traveling the US. So the second I started my fund, it was just in my DNA to, before we invested in a fund, to do the exact same due diligence that we did on the private equity side. So that meant getting on airplanes, going to visit the management team, talking to industry experts, talking to competitors, going to conferences, and it was a pretty immediate that I realized barely anyone, if anyone, was doing this for companies below $1 billion, and even it's even more drastic as you get smaller and smaller. I was showing up to companies I was interested in, and oftentimes they were like, "You're the first investor that's come here in 5 years in person." Um, so although in the beginning I owned a few large companies, I sold them pretty quickly because I realized that the purpose of starting a fund is to provide value to your investors. And I am also a large investor in the fund. And I did not think I could, once I realized the inefficiencies in microcap and small cap, I was like, this is where I could truly provide value to my investors, is by rolling up my sleeves and just traveling the country and getting to deeply understand companies that no one else is following. I couldn't realistically and in good faith tell my investors that I'm providing value to you by investing in Berkshire Hathaway or even Markel. I have it, I have no advantage over a large hedge fund that has 50 employees working. They're flying drones over ships to see how much inventory is being shipped. I just had no advantage there, so it was it was pretty quickly that I realized that I need if I want to provide value to my investors, I need to solely focus on this one area of the market. Maybe one day some opportunity is presented that's totally underpriced, but I have yet to. The watch list is longer, gets longer and longer. So and for the micro cap and small cap companies, so I've yet to run out of ideas. That's just how I think of it. Is I'm gonna stay in the area that I think I can provide the most value to my investors, and hopefully they're interested. Um, or obviously the current investors are, but hopefully future investors are interested in the micro cap and small cap space, because I feel like that's really one area. And obviously, take it with a grain of salt. I run a micro cap and small cap fund, but I really think that is one area where active investing can really set you apart, because of what I originally spoke about, that probably 95% of microcap and the smaller and the small cap companies are uninvestable. So there's been many times where I've hopped on a plane, gone and visit a management team and been like, that is just a totally uninvestable company. It might be trading at 5 times earnings. It might be 50% of book value, but that money is never going to get returned to us investors. And so you can just, by being an active investor, you can weed out those 95% of companies that would otherwise be included in an index fund. Whereas when you get to larger companies, multi-billion-dollar companies, I think more of the debate is around valuation, and less of the debate is this an actual sustainable, like, is there, like, it's less around the quality of the business and more around the valuation. Like, there's probably not going to be a fraud, for lack of a better term, in a multi-billion-dollar company. Whereas if you travel the country and visit these smaller companies, you'll find companies that I won't say they're frauds, but they are run solely to provide the board their fees, the CEO their salary, and what happens with the excess free cash flow, they could care less. I don't think you find so much of that in larger companies. So, and I don't think you can discover that in smaller companies without visiting them in person.